Good morning, everyone. This is Israel and Raphael again here. Today we'll be talking about closing costs. We're going to be going over a closing disclosure, and we'll be walking you through items to look out for and maybe even some red flags. This is the first page of the closing disclosure that you should get from your lender. They're all going to look pretty similar for the most part. Things to look out for is the sales price. Make sure it's a sales price that you're in agreement with on your contract. Loan terms, 30 years. Loan type, conventional, FHA or VA. And one of the items you should always look for is fixed rate, not variable rate. That's one of the issues that caused the 2008 bubble burst. Variable interest rates. Most banks don't do variable interest rates, and they really wouldn't be beneficial when interest rates are low. So I would recommend just to make sure it's fixed. If you look at here, the loan amount is $25,000 less than the sales price, which means that the buyer will be putting down $25,000. It's not quite 20%, so they are still going to have some PMI, but as you'll see below, it'll be quite low. Interest rate 3%, monthly principal and interest. This is what we discussed in a previous video where it breaks down monthly payment that goes to interest rate and principal, and then below you'll see escrow. There's two, I guess one of them's escrow, one of them's PMI. If you look at the breakdown here, so the mortgage insurance is $23 a month. That's why I'm saying that it's really low. This individual probably has really good credit, and they're also giving a decent down payment. That's why it's so low. Estimated escrow. In this scenario, it includes taxes and insurance, but sometimes it could also include HOA or a few other escrow accounts that your lender may require you to. So from a $736 payment after the escrow and the PMI, the monthly payment is about $1,300.
How would you define escrow, Rafael? Like it's always like you hear it all the time, but like just like what would be a simple definition?
Well, in this case, an escrow account is almost like think of it as of a savings account. The bank saves that amount of money each month so that at the end of the year, when the insurance is due, when the taxes is due, they have the money to pay it off. We'll walk you through prepaids, which go into the escrow account, because if you don't make a payment or two, the bank still wants to make sure they pay your taxes and insurance, because at the end of the day, it affects them. If you don't pay your insurance, if you don't pay your taxes, that means if anything happens to the home, they're the ones that get, screwed over. If you look at years 6 through 30, the PMI is removed. So about after 5 years, usually for the most part, most lenders will remove any PMI on conventional loans. My understanding that usually FHA loans, they don't automatically remove it, and it's harder to remove in FHA loans. So your monthly payment technically goes down, but if your tax rate, property taxes, keeps on going up, this is probably going to look a little bit higher years 6 through 30. The lender isn't really worried about this. They just, when they change their payment, they'll let you know, hey, your property taxes increase, your payment has to increase. And it's not your principal and interest that's going to be increased. It's going to be your estimated escrow. And you do have to be just aware that they may, that the escrow amount is similar to what you should be paying. As we spoke before, go to your city's central appraisal district and make sure the taxes are what they should be. And we'll talk about this in another video, but always make sure you claim your homestead exemption if it's the home that you're going to be living in. See here's the escrow summarized. $541, taxes, insurance, nothing else. So they are escrowing it. Some private money lenders don't escrow this, so you got to be careful too, because you have to pay the taxes. I did have a customer who forgot about that, and when they sold the home, they had to pay about $2,000-3,000 just in late fees for 9 months of not paying the taxes, but it wasn't being paid with a more monthly payment. They had to pay for it separately, and they weren't aware of that. So just be very careful to make sure your lender's paying your property taxes, basically. Okay. Now this is interesting. Closing costs. So these are fees and prepaids that we're going to walk through. The 12,000, almost $500. But look at the cash to close. The cash to close includes your down payment plus the $12,000 of closing costs. We'll walk you through the details. That's what this video is about. But it's a big difference between, hey, I thought I was going to give $25,000 down payment. Of course, but you still have another 12,000 in closing costs you got to pay. So if we go to the next page, and I'm going to really try and zoom in here because some of these, this is the overall page. I'm going to zoom in because some of these numbers are a bit small. Okay. So if you look at loan costs, so now these are items that the bank is charging you. This is the amount the bank is charging you. Usually the origination fee is about 1%. Some lenders will try and charge more, especially private lenders, but 1% sounds about right. Remember, it's 1% of the financed amount, not the sales price. But, you know, call it whatever you want, but there are some other fees that your lender's gonna charge you for, processing fees, underwriting fees, and they add up. If you think it's just gonna be 1%, it's actually almost double that. It's $3,000. And for some reason, these sheets or whatnot, they do the summation up top. So the summation of this is the $3,000. But yeah, take a look at this. Make sure it's not overly expensive to get your loan. 1% for origination fee is fine, but just make sure your processing fees and underwriting fees aren't ridiculous, which can happen. Services borrower did not shop for. So these are services that you need to pay either to your lender or a third party to get the deal done. Appraisal, this one's going to be probably the most common, $565. Make sure, I think I used to see it at $450, so it just kind of depends who your lender selects as the appraiser, and that's really out of your control. But make sure, a lot of times they charge a appraisal reinspection fee of $150 to $250. If the appraisal was fine and the appraiser didn't have to go back out to your home or to the home, make sure they're not charging you for that. It's very, very common that they charge a reappraisal or reinspection fee when one was not performed. So just make sure that what you're seeing here, especially the expensive ones, are were done or were performed.
Hey, Rafael, what does it mean did not shop for? Does that mean I had the option for, or we had the option to shop for it, or how would you think of that?
It's actually, it means you did not have the option to, because in this case, for example, the appraisal, there's really you don't select your appraisal, your lender does. It's because it's a third party of their choosing. So at that point, they're not gonna, you can't really go and get 3 quotes for your appraisal and see which one's the cheapest. And in this market, really, the one you want is the one that's going to do it faster. But again, that doesn't depend on you. All these small fees, I'm not going to spend a lot of time. They're just fees to process a loan that your lender's going to ask for, credit monitoring, flood determination fee. They're really not substantial enough to talk about. Okay. And this is going back to your question, Israel. Services borrower did shop for. And you really didn't, I guess you kind of shop for it. The ones from Prosperous Title or whatever title company you choose, they can be a little bit different. The lender title policy, those are usually a set, at least in Texas, they're set. So it's going to depend on the sales price. So I guess technically you could shop for them by going to a different title company. But in reality, and usually the title company being used is the one that the listing agent lists on the listing for the most part. If your agent really wants to use a specific title company, then by all means, but usually it's going to be the one that the seller chooses. And the reason being, usually the seller selects or pays for the title policy. Usually, it's all negotiable. If the buyer's paying for the title policy, then probably let the buyer choose the title company. But again, the only fee that's really going to change here, it's not going to be by much, is this the settlement or closing fee. It's $350 per side. So buyer pays their side, seller pays their side. In Texas, um, sometimes they charge $400. So it's not going to be substantial whether you go with title company A or title company B. But in your contract, just make sure it's very clear who's paying for the title policy, because right now in this closing statement, the buyer's paying for it, but you'll see later on they're going to get a credit for it. There will be a credit on the statement. It is a bigger amount, 1,300 bucks for a $200,000 home. Again, this is a summation of it, and then this is a summation of all of the items we walked through. So just to summarize, origination costs from your lender, appraisal fees that you're not going to shop for, and title policy that you can shop for, but it's probably going to be the same no matter who you use, or very close. Again, just regular recording fees for the court, your county court. That one's not substantial enough to even try and negotiate. Now, to this very important part, prepaids. This is very important because, in my opinion, closing costs have two sections: fees, title company fees, lender fees, and prepaids. Prepaids are that's what goes into your initial escrow account, and that's what the bank uses, the lender uses to pay in advance for your insurance or for your taxes, or if it's an FHA loan, your PMI, your upfront PMI. In this case, you don't have an upfront PMI because it's a conventional loan. But if you look at here, they're asking you for 12 months of your insurance. It's about $1,000. Now, this you can obviously shop for, and depending on whatever rate you get with your insurance company, it's going to be higher or lower. Prepaid interest. This is just it's usually from the day you close till the end of the month. So they close on September 14th. So they're going to charge you interest every day you have the loan. So this is, you're just paying interest for a few days of when you receive it till probably your first payment. Usually, it might, pretty sure that's the case, or before your first payment uh, time starts clicking, because I think the first payment here might have been November, because you pay in arrears, your mortgage payment. So this is just some interest that you're gonna have to pay from the day you close till the end of the month. Again, there's an additional escrow for homeowners insurance, which is 3 months. This is mostly going to depend on your lender and the date you close. Here, they're asking for the insurance for October, November, December, and they're also asking you for the next year's insurance premium. Property taxes, same thing, 12 months in advance, and they're going to have to pay this in this was done in 2020. They're going to have to pay this before January 31st, 2021. So they want to make sure they have that money. And we'll talk about you receiving a credit from the months you did not own the property. It's on the next page. I always see this aggregate adjustment. I'm not really sure what it is. I see it all the time. There's a slight adjustment. Uh, it's just probably, it has to do with dates, most likely than not. Other fees, okay. Title owners policy. This is another policy that the buyer requested, and this is being in this situation, it's being paid by the buyer, but they're going to get a credit based on how the contract was written. That's negotiable. It's just an additional, I guess, a bigger insurance on your title, in addition to the 1,300 we discussed up top. So if we get, let's see, closing cost subtotal. Again, all of this the borrower is paying, but they are going to get some credits. But if you look at, there's two items in total loan costs, which is part A of what we were talking about $5,300, and then other costs, which are, again, most of these are prepaids. If you sum both of those up, you're looking at about $12,500, which was the amount seen on the previous page. On the next page, we'll break down which ones you're getting a credit for, or what amounts you're getting a credit for, and which ones you're not. I think this next page is mostly blank. There's some small fees from the title company. Oh, here's the $232 that we saw over here. Title owner's title policy. It's just broken down here. Or I don't, that's weird. I don't know. I'm not sure why it's there. I thought it was broken down, but it's not. I guess it's just listed there as other again. So it doesn't really change. $12,500 is what we're referring to. These fees are being paid by the seller, so we don't have to worry about these. Okay. It's important that the loan estimate and the final amount is somewhat in the ballpark. You know, if the loan estimate is $12,000 and the final is $20,000, you're going to want to know why. And there might be a reason, but just make sure you're between your lender and your real estate agent, they explain that to you. As we discussed before, $25,000 down payment, deposit $500. This was the earnest money. So they put a $500 earnest money, make sure you get credit for it. In addition to if there's an option fee, which in Texas there usually is, make sure you get credit for that as well. Seller credits. They were originally going to give us $2,000 plus pay for that additional title insurance policy. So it was going to be $232, and it ended up being $2,732. In this scenario, we negotiated an extra $500 in closing costs in lieu of any repairs. So that's why it went up. You got to understand these numbers and make sure they're right based on the contract and what was negotiated. Adjustments and other credits we'll look at below. So, you know, cash to close, it was estimated to be about 30 grand. It ended up being 29,600. So it's in the ballpark. It's close enough. It's a pretty good estimate if you ask me from your lender. This is just the same $12,500 we talked about before. Earnest money, they're giving you credit. It's the same here. It's just relisted. Loan amount is your sales price minus your down payment. Seller credits, we spoke about $2,500 in closing costs from the seller, contribution from the seller, plus the $232 additional title policy. Seller paid title adjustment. So from the $1,300 that the title policy, the cost of the title policy incurred, the seller is paying for $1,127. So it's paying for most of it. That's why there's an adjustment here. County taxes. This is very important. You are going to pay the full taxes for 2020. This shows here the taxes that the seller is paying for because they owned it from the 1st of January till the 13th of September. They owned it all those days. So they owe those taxes, but they haven't paid them and they're not going to pay them. Well, they are in form of a credit. They're not physically going to write a check to the appraisal district or the central appraisal district. They're literally paying it by giving you the credit, and now it's your responsibility. So if this was a cash deal, or if this was a hard money loan where the bank's not going to pay for the taxes, you have to be 100% certain that before January 31st of 2021, which would have been the following year, you pay your taxes. And they're also getting a credit for the option fee I mentioned. This gets forgotten a lot. The $100 option fee. Before COVID, in Texas, you would pay the option fee to the seller and the earnest money to the title company. After COVID, they changed the rules in Texas, and now you can pay the full earnest money and option fee to the title company, and then they take care of it. Okay, so total due from buyer at closing. So this is the $212,500 that were estimated minus your $600 credit. So if we do the math real quick just to make sure, let me get a calculator. I just want everybody to be on the same page. We got $200,000 plus 12,448. You're looking at 212 minus 500 earnest money minus 100 option fee. You're left with 211,848. If I go back here, 211,948. Uh, there's $100 off. So see, there's an error we caught. It's probably the option money.
Yeah.
So anyway, total paid already buyer on behalf of the borrower. So this is what the between what your lender is lending you and what you've already paid. This they deduct this, and again it's broken down over here. And then cash to close is the $29,000 we spoke before. If you look at this $29,000, it's not 25 plus 12, it's 25 plus 12 minus any seller credits and minus any deposits you already made. That's why you're now looking at a $37,000 cash to close. You are getting credits. They're getting $2,700. They're getting the seller to pay title policy. So that's why this isn't necessarily the 25 plus 12 that you would maybe assume.
Yeah. And that's where you see like all those credits. I think it can get confusing. Like, how does it go from 12,000 to just 4,000 extra, right? And part of it was like the property taxes, the seller credits. There's
And the
a lot of things that go into it as well.
correct property taxes, seller credits, and any other deposit you've made. So you have $200,000. Actually, this is for the seller, so it's not really. This is the fees that the seller is getting. Usually, this gets blocked off, and the buyer doesn't see this. But basically, the seller they have their own closing costs. So if you're selling a home, we'll do another video on it. What's it going to cost me to sell a home? They have $12,000. They paid for the title policy. They paid seller credits. So and they paid their taxes. All in all, they sold their house for $200,000, but their net paycheck is $180,000. So it cost them about 20 grand to sell their home, which is about 10%. That's pretty normal since they're paying for $2,500 in closing costs. In the seller's market, you're not going to see the seller paying for closing costs for the most part. Everything's negotiable, but usually sellers are not going to want to pay for closing costs for any of it. This was more of a negotiation that we were able to agree to. But all in all, look at your numbers, do the math, make sure it's accurate. Taxes are very important, and really focus on the big line items. Anything over $450, those are the ones you should be double checking with three people really. Your agent, because that's probably the person you have most communication with, your lender, which you should have just as much communication with, and the title company, and have them explain this to you. It can get very confusing. It's not as straightforward as you think. Why? Because you think the seller's paying for something, and they are, but they're paying it in form of a credit versus it being on their list of line items to pay. Any final comments or questions, Israel?
No, I think I've bought two homes in my life, and the first one, the change from the first one to the second one, from the estimate to the final, changed about $3,000 on the day of closing. So it was a big surprise. The second home I bought, it changed very minimal, right? So it just depends like how ready you are and all the questions you're asking, and sometimes the banks also can mess up as well.
Yeah, and there's it's not going to be, as long as you have the money, it's not going to be a big problem whether it changes or not. Just understand it. If it changed $3,000, why? Did they estimate the taxes incorrectly, or were they not giving you a credit? Did you renegotiate a credit from the seller, etc.? It could be a lot of stuff, but really check. You can check with three people. I would check with my real estate agent first, my lender second. Well, not necessarily second, maybe just check with your lender as well, because they created these numbers and these estimates. And then lastly, the title company. But all in all, this is a pretty straightforward transaction. This was a conventional loan. FHA, it will be a little more expensive as far as not more expensive, just different fees and different maybe different amounts added to your prepaids, different amounts added to your loan due to PMI. So it'll change a little bit. But if you have any questions or if you need help reviewing it, feel free to send us a message on YouTube and we'll take a look at it.